Welcome. This video presentation highlights our November 1st market view analysis on our website, as well as a supporting video from our last October 26th presentations. And we would like to present to you today the 5th of October 7 comparative charts from the euro dollar to cable, to the Australian dollar, to the cross rate of the euro pound, the New Zealand dollar or the Kiwi, and the sterling yen on a daily basis compared with the dollar yen as well. Now that the quantitative easing by the Federal Reserve had been done and was made public that $600 billion would be used to sustain and support the recovery for the U.S. economy, and with the better than expected jobs report, had prompted the U.S. dollar to make a slight recovery on the closing of Friday back to the 76.58 level basis point. Now, with that said, a corrective move was expected simply because of the correction on the US dollar that prompted the euro to correct. If we look at it here on these levels, which we would try to adjust for a better viewing. Okay, there we go. That it did make a high at 1.4281 from a low of 1.4101. However, the price that it did came from, let's see if we can get it here at 1.3733. The uptrend is still obviously higher, and although the momentum here have lost simply because of the liquidation and position adjustments towards the end of the week, have prompted the euro dollar for liquidations or profit taking for buyers from the previous positions. Comparing it with our previous report, that this engulfing bar, or a formerly called a spike formation, was the trigger on a buyer's trap or a bull's trap that we would rather call it. And looking at it here on a weekly basis, you could see that the steep angle of acceleration and the trend higher has been extended to that particular high of 1.4281. With that recovery, or rather the pullback on the euro that closed at 1.4032, already looks like on a weekly basis as an inverted umbrella on the candlestick formation. The similarity of this configuration here on cable as well as the Australian dollar is quite similar from the euro dollar. Looking it back again on a daily basis, where we will be changing our range so it will be more visible. So the similarity here is quite unique, where the prices continued to move higher, including the pound as high as 1.6297, where if we look at it on a weekly basis, has penetrated the trend line resistance of 1.60 even, and this was the double top formation, where we did mention in our market view analysis that the idiosyncrasies of cable is to try to penetrate a double top formation, where the bulls have configured a bull trap again, as we made mention. Although here on the weekly basis on the euro, it looks like 3 consecutive doji that has made a lot of traders and analysts confused that such a correction is being made. It did try on a day-to-day basis, however, the trend is still intact, moving higher. The next question there is, would it be that the euro would have to correct soon? Well, when we look at the cross rate on the euro pound on a daily basis, it already made a correction back to the 0.8669 where it closed here from a low of 0.8651 to a resistance price at 0.8775, which is the psychological resistance, where you could see here that the 0.8808 is also a major resistance. Looking at it now on a weekly basis, the engulfing bar that is more negative for a correction is going back to the 21-day moving average at 0.8554, where a corrective move would be expected simply because it would touch not only the moving average on a 21-week measurement. There is a trendline support extending here to the 0.8554, where we would expect a slight correction once it has been touched. Now, looking at it on the Australian dollar, when we mentioned that the opening gap here on the 31st of October to the opening week of November 1st, that particular opening have already indicated that the continuation of the uptrend is in the making, with similar configurations of a double top and a triangular formation where all the technical indicators for Asian traders to move higher, and that also includes the New Zealand dollar. However, would like to note also that the triggered, or the fuel that triggered the Australian dollar, was the interest rate increase by the Reserve Bank of Australia. And we would like to state that the triangular formation here also on the New Zealand dollar, if we look at it and try to extend here, oops, I'm sorry, let's see if we can get it right, right here, where the move had started with a spinning top at the 0.74 even level, transforming it into a weekly that penetrated this double top formation at 0.40 even, and with extreme cautions, the length of this consolidation and the length of its upward trend here measures the same once it has penetrated it. Again, with that said, the cross rate on the sterling yen here on a daily basis would seem to continue to move higher, and looking at it more on a major trend line, once we extend this chart and looking at it now on a weekly basis, you would see here that the Fibonacci retracement has been made from the high top to the low point, where the extension or the angle now from the second Fibonacci fan has been on the support level moving higher, and the right angle triangle formation on a 90 degree angle, has made a 1.31 high or closing price here, where the stochastics already had shown an open formation where the extension higher or the trend to move higher, and next target would be in the levels of 133.10, which would be accomplished within the next week or so. However, comparing the cross rate with the dollar yen now is supporting the move with cable moving higher, and the correction on the dollar at the closing price on Friday is expected to continue to move higher and reaching now or closing at 81.46 high, closing at 81.32, and we're looking at it now. Let's see if we can get it here, that the next target level would be at 82 even, and increasing momentum with open stochastics levels. We would expect a slight recovery on the dollar as well as the dollar yen, and as most traders have been already anticipating the move on the dollar. Thank you very much and have a pleasant day, and best to your trades.